good morning, fellow traders, and welcome to today's live session. As you guys know, today is June 5th, 2023. We recently started this new month of June, and you can tell because the weather's changing. The weather looks like it's getting a bit better, so we may see a correlation in regards to price. We may see volumes dwindle down a little bit, but for the most part, we can still look for trading opportunities because I know we love to day trade and we also love to scalp on the smaller time frames as well. So, of course, we'll have plenty of opportunities to really take advantage of certain moves in the market. But before we move forward, I just want to say, good morning, everyone. Good morning, Stuart. Good morning, Robert. Good morning, everyone who is in attendance. And good day to those who are overseas. We hope you guys had a wonderful weekend. But we can get right back into these charts and start analyzing them and seeing if we can figure out some high probability setups in the market. Now, as you guys know, today is a Monday. So usually on Mondays, there could be some level of ambiguity or confusion on how price may want to go. But what we do is we look at the technicals. We look at directional bias, we look at order flow, we look at all those things to sort of get an idea of what could potentially happen in the market. So in our case right now, even with this pair that we're looking at now, we're looking at the Euro USD and we're currently on the 1 hour chart. And it's pretty obvious. The US dollar Japanese yen. And we're looking at the 1 hour chart. I think I said US dollar Japanese yen, but I'm not sure. I said Euro USD. Okay. I thought I said US dollar Japanese yen. I don't know. Marvin's in the background trying to correct me. But what we see on the US dollar Japanese yen, we see what is obvious. We see bullish order flow. We see directionality to the upside. So then we want to look for opportunities to buy. That would be our bias. That would be our sentiment. And if you want confluence on directionality, you can look at multiple time frames on US dollar Japanese yen. It's pretty obvious on the 1 hour chart, we're bullish. And if you go to the 4 hour chart, we should be bullish as well. It's pretty obvious. Price created a strong expansion to the upside. We see the 20 SMA curling up or sloping upwards, which means there's a bullish bias on the 4 hour. And on the daily, we obviously have a bullish environment on the daily, and we just came from a correction. Price corrected into this area of demand. Of course, we can draw it in later, but you guys see it. We have this hesitation candle right here, this area of demand. Price bounced from it, and then we see price pushing up from there. So our bias on US dollar Japanese yen is to the upside. We'll be looking for buys. So then that's what we're preparing for right now. And we could be looking for a buy really, really soon, because if you look at price corrected into this area of structure right here. Look left, structure leaves clues. What you could do in order to identify structure is look at the line chart. So even if you go to the line chart, we see right here where these swing points are. That could be an area where we could see buyers potentially step in, because what was once resistance can become support. So we see on a few occasions, right here, right here, and even right here, we see this level or this area respected. So that's an area where we can identify our zone of support from. So, and then I'm pretty sure you could look left. You can see this wick right here. So this level was respected on multiple occasions, but what we want to do is draw out the zone. So then we're going to say, okay, this is 1 hour support. We won't consider this demand. But this is 1 hour structure support. And we can see that price is, it corrected into the zone, pushed up a little bit, and then we get this another move lower. So let's see if this is indicative of what we typically see of a 3-wave pullback. Let me just see. So let's drop down to the 15-minute. And this is interesting, but let me ask you guys this question. Do we see a 3-wave pullback? Yes or no? This one right here is kind of hard and difficult. In all honesty, whatever you say, or whatever you think is happening. It could be right, it could be wrong. But this one right here, there's a little bit more confusion on whether or not we're in a three-way pullback or not. But what do you guys think? Like, I know for me, this one's pretty hard, but I'm going to assume that right now, we see leg A, like really this move right here was boom, boom, boom. This entire move right here represents one leg, leg A. This could be leg B, and we could be seeing leg C now. So if that is the case, then what we could do is look for a potential entry, especially if we see some type of break, but it's risky. It's definitely risky, but there is a possibility we could see price push up from here. Based on just how I analyze the market, I know Marvin may be seeing something slightly different, but for me, based on how I view things, even when it comes to three-wave corrections and stuff like that, there's a likelihood we could see price bounce and correct and push higher and test these highs right now. So I'm going to be on the lookout for that. Of course, as you guys know, I'm going to wait and be patient. We have a lot of structure up here, so if you wanted to, you can wait for that. But we also have this area right here of, well, no, let me go to the 1 hour chart. Yeah, well, no, well, let me take that back. No, we don't. It'll probably be best for us just to wait and just sit on our hands and be patient for this one, because based on what I'm seeing right here, in order for me to feel comfortable about getting in, we would need for price to break these highs, yeah, that would defeat the purpose of entering a buy. So I'm going to hold off. What we can expect right now is a deeper correction, deeper penetration into the zone, possibly, and then for price to a deeper penetration, and then for price to eventually, rotate higher. Oops, somewhere in this zone, and then push higher. So then that's what I'm expecting on the US dollar, Japanese yen. It's going to retest that zone, push deeper into that zone, and then we're going to see a push to the upside. So yeah, that's what I think is going to happen, but we shall see. Yeah, good day, Bridget. Thanks for coming. Thanks for coming, Joe, as well. All right. So yeah, I know Marvin wants to say something briefly. So yeah, I'll let him. Yeah, I just kind of want to, jump in here and just say how, like before, you remember a month ago when we used to cover a lot of the yen crosses, like the US dollar, Japanese yen, Aussie yen, CAD yen. We said the reason for it is just broad-based Japanese yen weakness. The Japanese yen was selling off as the Bank of Japan chose to maintain a more expansionary monetary policy compared to the rest of the world. You remember they weren't planning on hiking rates. They were planning on keeping their interest rate in negative territory. So that's what fueled the rally in most of our yen crosses. But for today, and what we've seen recently, really, this rally in US dollar Japanese yen has primarily been due to expectations of a higher Fed funds rate, or expectations of the Fed raising rates and doing more tightening of their monetary policy, tightening of liquidity conditions. We just had the debt ceiling that was just signed by Biden. I think it was on last night. That's going to contribute to some tightening, some fiscal tightening. But excuse me, like my throat. I need to clear my throat. But of course, we also see that the Fed, some members of the Fed are actually saying right now that it may not be time for us to pivot. Yes, we can skip a rate hike possibly in June, but the way things are looking, we may have to tighten some more. So then really the US dollar Japanese yen, and just like we've communicated before, it has a high positive correlation with US Treasury yields. So whenever we see US Treasury yields move to the upside, we would traditionally see the US dollar Japanese yen move to the upside, as well as the market prices in a higher dollar due to higher rates. So this move for today in US dollar Japanese yen is primarily dollar driven, and really most of the moves across most of the currency pairs today are really dollar driven. It's the greenback that's really driving a lot of the moves today. So I just kind of wanted to, touch on that. Yeah. I will pull up the yield chart, but I know Melvin's a little. Yeah. And I know the yen's selling off too, just like Marvin's been talking about. We've been seeing, a lot of yen weakness as well. I know someone mentioned they can't hear anything. Let me know if you guys hear or see anything. I know Bridget, I know you still I know Joe said all good. I'm not sure why you could be having an issue on your end. I'm really not sure why. But hopefully I'm not sure. Maybe you can log off and log back on and then see if that'll do the trick. See if that'll work. But I guess everything is good from the feedback we got from the other members. It could be an issue on your end. So okay, great, perfect. All right. So let's get right back into it. So of course now we're starting to see this move lower like we expected, this deeper push or penetration into the zone. So then once we see that, then and what I want to see is it take out these lows. That's what I really want to see. I want to see price take out these lows right here. And then as soon as that happens, then I'll be more comfortable and potentially looking for a buy setup. But mind you, we do have invalidation right here. We have this invalidation area right here. And if we get a break and close below this level, then we have to be somewhat careful, because we know that there's a possibility that things could be shifting, and things could be shifting. All right. But it's always good just to stay on the side of the order flow. Right now, we know that the order flow is to the upside. We're in a bullish environment on the 1 hour, so we'll be looking for opportunities to buy. And of course, regarding the three-wave pullback that Melvin talked about, like sometimes if I'm unclear about how this three-wave pullback is formed, I go to a certain type of chart type called the Hakanashi, which could help to some degree to sort of determine how that three-wave pullback is formed, because it sort of plots out the candles relative to momentum. It kind of gives you an idea of which side of the market is leading price action at a particular period or within a particular period. So usually, when I go down to my trigger to look for the three-way pullback, if it's very complex and confusing, I sometimes, go to the Hakanashi chart, Hakanashi candle chart, to sort of get an idea of how that could potentially look. Yeah. And we'll go there in a little bit. Let me add this alert, because I think, there's a possibility that the sentiment could be shifting somewhat. And I just want to have this here just in case. But let me put the date. Fine. Oops. I put the wrong date. So June 5th. Whenever we place our alerts, we always want to include a date or some type of time stamp on it. But we can say break and close below invalidation. Abort ideal question mark, because there's no guarantee we're going to fully abort this buy. But let me just include this here. But what we could see here is that price did react to this area. We did see a reaction. It did take out the lows right here, create a new low. So then what we're going to do is wait a little bit. My only concern right now is these long wicks right here, because obviously we know that there's sellers right here. There's sellers, but I wouldn't consider this an area of internal supply right here, because we need to see a break and close below this low. We only see price wicket, so then this is considered weak supply. It's considered weak supply up here, or weak structure, right around here where we have these wicks. So yeah, it's up to you how you want to trade it. But I know with some people, they'll look for something like this. They'll look for at least a 1 hour candle close above this area, and then they'll look for the retest, and then they'll look to get in. So it all depends on what type of trader you are. But what I'm going to do is I know Marva talked about the Hakanashi, but yeah, did you want to say anything? But yeah, I want to mention about just this move lower, which of course at the time we knew that it could possibly be the support that price honors. One thing we want to see in our leg C, like this move lower would be sort of like the leg C, or it could be leg B. Well, yeah, but what I'm saying, we really got to go to the 15-minute chart to sort of get an idea of that. But for me, like I see, I see this as leg A. This move down to test this area is leg A, leg B, and then leg C lower. Now, for me, I like to see leg C reach oversold territory, but sometimes you don't get that. Yeah. What I was as long as it mitigates an area of previous demand, then of course you can still apply that if it does it a second time. But for me, like I like to be very conservative. I don't like to jump in on every single trigger. I would like to see this leg C form an oversold signal with the stochastic giving to oversold territory or close to it. Yeah. So then this could be leg C, but also this whole entire move can be leg A as well. This could be leg A, because leg A is typically a break of some type of structure. But we'll see. We'll play it both ways. Like when it comes to trading, it's not going to be perfect all the time. You may make a mistake in assuming that, hey, this is a third wave. But then once you notice it, you're okay because you use proper risk. And then you look for a chance to re-enter, because, once you find out that you're wrong, then you can figure out, okay, what is price really trying to do? And then you could make a decision from there on how you want to move forward with that particular trade idea. But this could be leg A, and what we could see is the correction, which could be leg B, and then another leg C. So then, that's what trading is all about, really, just making judgments and you do the best you can with what you know and what you see. Yeah, exactly. And you apply the right type of risk that you feel comfortable with. If you're unsure if this is the true area that you should be buying, because the thing is that you can be right, but if you're right at the wrong time, you're still wrong. Yeah. So then the thing is that you can have the right bias. You can be right about knowing that price is going to go up, but it's all about timing with trading. And if you're right at the wrong time, you're still wrong. So then the key is to sort of, wait for confirmation. If you're unsure about whether this is an area that you should go and buy, then just go in small. As long as you're making money. We're not in this business of trading simply to, get super, super rich real quickly at such an unusual speed. Like it's all about mitigating or executing a trading strategy. And with time, as we remain patient and have self-discipline and use proper risk management, we'll see that the more risk averse we are at times, we'll see that steady growth of income even in our trade account. But I know you probably want to move forward, but I wanted to talk about like I don't want to stay on US dollar Japanese yen too long because I know we have a lot to discuss this morning. But of course, that's the Hakanashi, what I talked about earlier. But even if the Hakanashi is confusing, of course, we see, kind of like a leg A, leg B, leg C. But even if this is all leg A and you don't quite know yet, then there's still other ways you can kind of confirm and verify. One of the ways which we may not touch on is just looking at the dollar, just looking at what is going on with the dollar. Do you see a similar three-wave pullback on either the Dixie or either the US dollar equally weighted index? So then I kind of want to, my brother to go there so that we can see how is the 1 hour chart or how's the 15-minute chart for the Dixie. Now the Dixie is a little bit different because it's weighted and it's more heavily weighted in euros. So it's about like 57% weighted in the euro currency. So it could be a little bit different, but yeah, it's definitely and still bullish. Seems like it's in the middle of an impulse, but yeah, this is the Dixie, the equally weighted US dollar index is this right here, and we see that that's sort of like almost like in a correction. It's forming a correction. Yeah. So then really this pullback could be a little bit deeper, and even on here. So then this could let you know that this is all leg A. Like you see this? Yeah, like with the Dixie right here, or the US dollar index, like this is all leg A. So the move that happened just recently, US dollar Japanese yen, this whole retracement lower could simply be all leg A based on what we see with the US dollar equally weighted index. Yeah. But you still want to prepare for the possibility to enter in on smaller risk if for some reason we don't see that traditional play out of those technical three-wave patterns. Because one thing you got to know about Monday, and especially since we're in the sort of like the beginnings of the summer trading season, we may not see those technical plays, fully play out like they usually do because it's low volume. And I may talk about that, a little bit later, like low volatility. We look at the volatility levels, they're extremely low today. So then this could be the reason why we're seeing this dull in the market that's sort of like moping along. I know if you look at futures markets, they're not really moving anywhere. I think, right now markets are waiting for some news to come out, which I may talk about in a little bit. But you can see with the US dollar index that, based on this move in the dollar, this retracement, it could simply be all leg A. And so that we just got to keep that in mind. But I also wanted to point out how we do know the directionality based on yields. Like, can you pull up the US 10-year Treasury yield right here on the right side? The US 10-year or US 2-year. Yeah, and we can see that the US 10-year, it's moved to the upside, but it has a tight correlation with the US dollar Japanese yen. So it can kind of give you an idea of where the bias is. As rates go up, the US dollar Japanese yield is going to pretty much go up as it takes advantage of that yield differential between the US dollar and the Japanese yen. So then you can, make money on that. But yeah, I just kind of wanted to point out different things you can do to sort of help you with your validation or your confirmation. If you're not sure about a particular setup, then there's other assets, cross-related, interrelated assets that you can look at to sort of kind of help you with your decision making. Other assets, other indexes, other instruments or whatever that can sort of help you to make a decision. And I know that this is what we typically do. We always look for other assets or other indexes to help support our trading decision. And even some of the best traders out there, like even one of the top traders at FTMO, the prop firm, that's what he does. He really doesn't make a decision until he looks at a correlating asset, or some type of index to help support his decision. But this is stuff we'll talk about later. As of now, you can just simply read price action and determine what you may want to do. And if you want to be patient, let me go back. If you want to be patient, with your setups, because of, in all honesty, we do see all these long wicks right here. This could be a cause for concern. So then, if you wanted to, if you're the more conservative trader, you'll just wait for price to clear these wicks, wait for a break and close above them, and then look for an opportunity to buy on a retest of the zone. So there's multiple ways you can do it, but we'll come back to US dollar Japanese yen, and we'll take a look at it later when we have a better idea of how price may want to go for this morning. But do we have any questions about the US dollar Japanese yen? Going once, going twice. Okay. Well, yeah. And I think, in all honesty, I think things may start shifting on the yen. In the yen, and this is where I'm talking about as far as, looking at other instruments to help you with your decision. And, I know we don't usually do this too often, but you can go to the yen index, and this is the 1 hour, and you could see how the yen is moving, right? If you look at the Japanese yen index to the right, what looks like could be potentially forming right now? We had this strong sell-off, but what could be forming right now on the yen index? If you look at this area right here, what could be forming on that particular index? Joe said it. Yep, an inverted head and shoulders, exactly, which means we could be due for a potential reversal. A reversal or deeper retracement. Or deeper retracement. Yep. A reversal or deeper retracement. We have the left shoulder, head, and price could be forming the right shoulder, and then we could see price push up, which means either deeper retracement or a reversal. So then, you know, this is why really you have to, from time to time, look at these correlating assets, these indexes or indices, in order to help you with your decision-making process. Because right now you can be a little bit more cautious and patient with this setup, seeing that, hey, it looks like things with the Japanese yen index may be shifting. Let's be a little bit cautious. Patient with the US dollar Japanese yen. Yep. Let's be a little bit patient with the US dollar Japanese yen. And then you can look at other assets as well, other things. You'll typically see most Japanese yen currency pairs move in a similar fashion. And for some, you may see a reversal. Like, I think for euro yen, I have that on my list as something to look at, but I think that could be going through a potential reversal right now. Yep, and it is. We can see that this retracement has been pretty strong and is more like an impulse now. So then now I'm not looking to buy, the euro yen, mainly due to the fact that it broke and closed below in validation. And it broke and closed below in validation, and looks like the environment may want to shift to being bearish. You know, it's forming that V top. Yeah, it's forming that V top. Very similar to what we see with this V bottom there. The V bottom on this Japanese yen equally weighted index. So it's just a reverse. So what we can conclude here is that the yen could be in the midst of a deeper correction to the upside on the yen, which means that for these pairs, we could see a deeper retracement, a deeper pullback. And if so, how deep? Well, you can go down to your 4-hour and you can say, hey, there's a possibility we could see a 4-hour correction. 4-hour correction right into this particular zone, right here, right into the zone where we have this hidden demand, this demand zone right here. This is what we can see on the euro yen, a deeper retracement, and we may see a deeper retracement on the US dollar Japanese yen. We can see price come down into this zone and then bounce from there and push to the upside. But yeah, like I know we went through a lot. I know this was like a lot of things that we're trying to teach you guys, but we want you guys to be more consistent and more accurate with your decision making when it comes to trading in these volatile markets, especially since we're entering summer season. You know, it's important that you have at least more clarity on what price may want to do. Now, one thing I could say that's good about the summer is that when price hits those levels, they typically react and respond to certain key critical zones of support and resistance or supply and demand. That's the good thing about trading the summer. You typically see a nice reaction, but sometimes you won't see the entry that you're trying to look for. But with that said, let me move forward. Euro yen, you can see a deeper correction. What we're going to do, we're going to, I'm just going to remove that from the list today. But if you want to look for this 4-hour pullback, you can. There's reasons to support that. However, order flow on the 4-hour is to the downside. Based on the 4-hour, we see price create this move to the downside, breaking these lows down here. So order flows to the downside, which means that you may not want to have that bias or that sentiment if you're looking for setups on the 4-hour. So yeah. I just want to to clarify, because some of you guys may be confusing. Like, how we trade pullbacks and corrections is dependent upon the order flow of the time frame that correction is on. Like, for instance, when we was on the 1-hour chart, the order flow, I don't know if it was bullish or was it still bearish? Sure, the order flow is bullish on the 1-hour. Yeah, on the 1 hour. What you typically want to do. So then what I was saying is that, like, see, and this is where we get into more of the nuances of it. What you typically want to do is trade on the side of higher time frame order flow. So if you're looking for a pullback on the 4-hour, you can look for the daily as well for your bias on order flow or directionality. And yeah, it could go well, but what we do see right here is that on the 4-hour, it looks like the order flow is shifting, but on the daily, it could still be bullish. Yep, which it does look. So then what I'm saying is, you can still trade that 4-hour pullback. Yeah, you can still trade it. You can still trade that 4-hour pullback. Yeah, so yeah, I apologize for confusing you guys a little bit, but yeah, even though we do see order flow shifting on a 4 hour. We don't determine our order flow bias on a 4 hour if we're looking for a 4 hour setup, if that makes sense. We go to the next higher time frame, like the daily, to determine order flow. Now, I hope that makes sense. So it's just like if you're trading the 1 hour, you're looking for a 1 hour setup, right? 1 hour setup right here. Of course, things are rotating, but it aligns with what we see on a 4 hour. You trade in the direction of 4 hour order flow on the 4 hours to the downside. So you want to look for sales. So then you'll look for this eventual break and pullback scenario in order to get in. But yeah, we'll talk about that stuff later. But one thing that we want you guys to know is that when it comes to trading, just pick one central time frame that you're going to focus on the most. And then from there, determine your setups around that. Like I know for us, when we usually trade in the private war room, we focus on 5-minute setups, but we look at 15-minute order flow. We always go to the next higher time frame to determine order flow. And sometimes the order flow will be similar from the 15-minute to the 1 hour, even to the 4 hour. Sometimes it may be similar. So then you'll be on the right side of the market most of the time when that's the case. But anyways, I don't want to spend too much time on this. We can park our car here and spend a lot of time going over this stuff. But in the meanwhile, what we want to do is look for some opportunities, some day trading opportunities in the market. So the next pair we're going to go to right now is Euro Pound. Euro Pound. Let's see how that's going right now. So this is Euro Pound. And remember, we actually added this to the list. Thanks for Little Boots, John, for giving us for letting us see that, hey, price could be due for a correction on Euro Pound. I know he mentioned that in the group. And ever since he did that, I had my eye on this setup because right now we're in that zone where price could potentially rotate, right? Remember what we placed in the room. Little Boots said there could be a correction on the daily chart. And yes, that's what's taking place right now. We see this correction up into this zone. I know we sent the image in the private chat. And we could be due for a continuation of this bearish move to the downside. Bear in mind, we are approaching this area, or we did test this area of daily support or demand right around here, right? This area of demand, we do see price testing that. I know, yeah, he said played it overnight for a decent profit. Great job. Great job. Because, we knew that a correction was happening soon because of that demand, that support down there. And, price was due for a correction. We saw the price action candles right here. So then, yeah, that was a nice decision to play that correction to the upside. But yeah, he had a nice move, capitalized on it. I'm glad you took advantage of it. Now we need to look and analyze this pair further to see, hey, could there be more upside? Could this thing correct deeper? And let me ask you guys this question for those who's been with us for a while. On a daily correction into an area of resistance, let's just say we're in the middle of this pullback now. Price is pulling back on the daily. What time frame is our trigger time frame and the time frame where we would look for a 3-wave correction? What time frame would that be? Where, if we're looking at a daily pullback, daily correction, what time frame will we typically see the 3-wave pullback on? Okay, Robert said 4 hours. Stuart said 4 hour. Yep. And both of you guys are absolutely correct. You will see it on the 4 hour chart. Remember, you always drop to the next major lower time frame. Really, there's a mathematic thing behind it. I'll probably talk about it a little bit later. But you'll drop down to the 4 hour time frame. Because, well, I don't want to confuse you anymore. But let me go to the 4 hour. So you can see. So based on what we see on the 4 hour, do we see a 3-wave pullback? Yes or no? Do we see a 3-wave pullback to the upside? When I mean a 3-wave pullback, I mean this type of move: leg A, leg B, and the leg C. Do we see that on the 4 hour chart? Do we see a leg A, leg B, a leg C to the upside? Do we see that? Let me say. Okay, so Adam said no. Bridget said nope. And Naomi said no. Yep. And all of you are absolutely right. So what leg is it? So yeah, what leg is it? So what leg do we see forming now? Is it leg A, leg B, or leg C? What leg is forming right now? You guys are pretty good. Okay, Naomi said leg A. Is she right? Well, she could be, right? But yeah, this stuff is really simple. It does not have to be hard at all, but the more you look at the charts, the more you'll get an idea or notion of what's really going on. So yes, Naomi is correct. What we see right here is leg A. It's just simply leg A, which means we need to what? See a what?
Well, I'm pretty sure everybody knows
a leg B, right?
Leg B. But let me ask you guys this. We can zoom in a little bit further, but where do you think leg B should go to? Because you want to also estimate where structurally you see leg B going. We know that, leg B is always smaller than leg A and leg C, as far as generally. But in your mind, like, I guess you can just zoom in to this area. Like, just kind of do something on your chart where you can just zoom in so that they can see the price action clear. I don't know if they're looking at it. Some of them are looking at it from their phones. They may not be able to see clearly. But where do you think leg B should go to and end? In the origin of leg C begin? Like, what area?
Yeah, so yeah, this is a good question to ask, because we really want you guys to get a better understanding of how price typically moves. And remember what we said before. Price usually volleys back and forth. It goes from demand to supply, from supply to demand, and then from demand to supply. That's a clue to help you to determine where price could go on this B leg. But yes, we see this correction to the upside. Where could price typically bounce from in order to create the origin of that C leg, or the beginning of that C leg? So yeah, I guess well, I know we have someone maybe trying to chime in now, but this is just important stuff for you to know. If you learn this stuff, then you'll typically make better decisions in the market. You won't make as many mistakes if you recognize certain themes and certain things that's happening, certain price action themes. Okay, Bridget said 0.86 area, and she is absolutely correct. Good job. Good job. Great job. Right around this area where we see this hesitation candle, right around here, is where we can expect that leg C to form. So in other words, what you can do, you can just create another zone right around here in this area. And then what we expect this to be leg A. Leg B will be a correction right down to test the zone. And leg C will be the expansion up here, deeper into this zone of resistance on the daily chart that we drew in, right? So yeah, that's how you can look at it. But yeah, great job, Bridget. I could see that you guys are listening and that you guys understand, how to interpret and read price action. But yeah, this is what we're expecting. We're expecting for price to eventually fall lower, maybe bounce from this zone, and then push higher from there and expand deeper into the zone before we see the real sell-off in price take place. Boom, boom, and then price fall down. Now, yeah, so oops, no, let me just keep that there. So I can see that you guys are really getting it and that you guys are understanding a little bit what to look for. Of course, it's going to take time to master. I can't even say that I mastered it. I know I haven't. There's a lot for me to learn as well. But the goal is just to grow each day and become better and better at recognizing certain themes when it comes to price action. So, okay, now that we see that, how are we going to approach euro pound? Well, we know that price could be correcting real soon. We're at this area of resistance, and we can see stochastic is overbought. We can see a correction real soon. So you can either trade this pullback down into the zone, this leg B, or you could just wait for price to get to this area before you look to buy again. But let's just go down to the 1 hour chart. Let's see how things look on the 1 hour chart. So go to the 1 hour chart, and this is what we see on the 1 hour chart. We see a potential pullback scenario. Now, if you want to, you can also look for price to bounce and react to this hesitation, because price could do something like this where we could see price come down, test this internal hidden demand zone, come back, retest the highs a little bit, push up, and then it could make its real move though lower, its real leg B. It could do that as well. So I just want to let you guys know that. And then from there, you could look for another opportunity and then trade that up on that leg C. But yeah, if I was to trade this right now, how would I approach this? Well, you have 1 hour demand right here. And even though I'm expecting price to test this zone right here, I could still look for opportunities to buy right here. Because like I said, there's a possibility we could see price test this area, push higher, make another push higher for that leg A before it really starts forming leg B. So, I'm just going to stay on the side of just observing that for now. So with that said, what we can do is simply wait for price to correct into this zone right here. Give us that correction into this zone. And then if we see bullish confirmation, if we see a three-wave pullback and a bullish confirmation, it will look to buy. And again, guys, I know we go over this over and over again. If we're trading a 1 hour correction lower, what time frame do we drop down to in order to see our three-wave pullback and in our trigger confirmation? If it's a 1 hour pullback, what time frame do we drop down to in order to see that three-wave pullback scenario? Okay. Yep. Market said 15. Adam said 15. The both of you guys are absolutely correct. So, yep, that's what we'll drop down to. But in the meanwhile, we're looking for a pullback, and we should see that soon. You should see a decent expansion. And then from there, we could see price start working its way all the way back down to this zone, and then give us another buy scenario. And then we can buy that in that C leg type scenario. But all right, guys. So yeah, that's euro pound. So let's just pause with that for now. I know we did more teaching than anything. I hope it was beneficial. But we looked at two different scenarios. One was US dollar, Japanese yen. We looked at the euro yen as well. We had an idea of where price could pull back to on the 4 hour chart. But we also see euro pound as well. An opportunity could be forming right here at this structure. But if we see a break below this structure, then guess what? We're going to look for our buys right at this other structure down here. But when price gets there, we have to probably wait for the environment to shift from a bearish to a bullish or something like that, and then ride this move higher. So if we do see a continuation of this pullback lower, if we see a continuation of this pullback lower into the zone, then we'll still look for a buy, and we'll trade it up. That could be the C leg that we're looking at.
Yeah, but we may not get that. I'm thinking that we may, get this move here and then a double top to form.
Yeah, it could be a double
in
top.
order for it to retest and come all the way down here to this original area.
Yep.
So then I'm thinking it's going to top and then create a deeper retracement lower in respect of that 4 hour pullback.
Yep.
So exactly. That's how I'm looking at it.
Yeah, I think so too. I think so too. But we'll see. We'll see. So only time will tell. But that's what we typically expect based on just us looking at these charts for a while now. But what I'm going to do, I'm going to hand the mic over to Marvin. If you guys don't have any questions, I'm going to hand the mic over to Marvin, and he's going to talk about what we've been seeing fundamentally and geopolitically, all that good stuff. And then if we have time, we may do some top-down analysis. We'll see. Yeah. So I'm going to just, use this time to briefly go over just the concept of, summer trading and what we could potentially be seeing now, what we could possibly see weeks from now when we do get into sort of like the thick of that summer trading volume. But it seems as if right now we can't really say for sure. We're going to see that summer malaise, the summer doldrums kick in. But
one thing I wanted to point out is that one indicator or one instrument that we can look at the VIX or look at the volatility index to sort of give us an idea of, how markets are moving. Where is volatility at the moment? Is it reflective of summertime volatility? So then what I want to do, I want to go to the VIX futures, not the VIX, the S&P VIX, but the VIX futures from the Chicago Board of Exchange. So let me just do this real quick. And I'm going to go to the 30-day contract right here, the current contract. And as you can see, the VIX currently is at 17. Now, if we go and look at it from a week, from a daily perspective, you can see that it's at fresh lows. It hasn't been this low in months. You can see, like, going all the way back to February, even before the calendar year, it has not been to 17. You can see this dotted line right here, and all of this empty space, this black space, just lets us know that volatility is at extreme low levels right now, which is sort of indicative of summer volatility. The volatility dwindles down, but also is reflective of less fear. I know Congress just passed the debt ceiling, so we're on the other side of all of that fear of potential default, which was really theater, in my opinion, because there's no way that the U.S. could default when pretty much the U.S. bond market serves as the financial framework by which they assess risk across all financial markets. The U.S. Treasury market is that risk-free asset that most markets rely on when it comes to them calculating risk. So then how does a U.S. debt default look? What impact would it have? Is it just nomenclature, or is it just a label they apply? So then, but as you can see, we're on the other side of that. Biden signed it. We're seeing volatility, especially in the futures market, at extremely low levels. So then that's the reason why we're seeing this malaise, or this sort of like, calmer markets on this Monday morning. But what I want to do right now, since this is our fear gauge, we don't have as much, I guess, of a fear presence, you could say, that would create strong moves in the market normally when the VIX is high. And that's because traders are buying and hedging themselves from any risk, because they feel that volatility, like the news, the events are going to drive prices beyond their ranges. So then that's the reason why we see the VIX may move higher, but it's low, which could lead to more buying if risk sentiment is more hopeful and optimistic, or it could just lead to markets just sort of staying neutral and saying, you know what, I'm going to sit on the sideline until this next batch of economic data comes out, which we're going to touch on a little bit, because what markets are focused on today, on this Monday morning, is services activity, the service sector. That's what most of the global markets were focused on. And in a little bit, we'll be going to our economic docket, to see what's happening in the services sector economy. Like, are we seeing expansion? You remember, the services sector has been pretty resilient compared to the manufacturing sector, or the manufacturing component of the economy. So then, are we seeing growth? Are we seeing inflation pressures there in services like we have been for the past few months? Or are we seeing signs of deceleration of services sector activity and slowing growth? So then, right now, the market is sort of waiting for that ISM services data, that regular S&P Global Services PMI, and composite data to come out to give us more clarity on where growth is. Because you got to keep in mind that for the U.S., we're not so much of a manufacturing economy anymore. We're more of a services-based economy. So a lot of our GDP, our growth, comes from the services sector. So the markets are definitely going to respond to that. And that's probably the reason why we see volatility low, as traders sort of sit on the sideline. They're not taking any active positions until this data comes out on the docket, which will be in a few minutes from now. But before I move forward, I want to look at what are our future markets doing. When we trade, before we trade, we got to see the environment. We got to see, okay, what's the macro flow? What's the micro flow, I should say. So then let's go to our S&P 500. So let me just do this. US 500. We just go there, and we can see that the US 500, compared to where it opened, it's not too far from where it opened. It's still, positive, but you can still tell that it's limited. It's sort of around its opening range. So then that's with that. Okay, let me just do this real quick because I want to put all of them up. And let's go to the Dow. Let's do US 30, our traditional blue staple index, blue chip index. And okay, we can see that it did move higher, but I think it's trading around flat or, sort of below its opening price. You can see that it's moving lower. It's kind of soft, but it's still close to its opening range. And oops, right here. And then I want to bring up the NASDAQ right here, US 100. Yeah, I'm going to the derivative since it's more of a current price. Yeah, I'm not going to go to the futures one, but of course, this derivative is really a reflection of the futures. This is all the futures market right here with these particular CFDs that you see here that we're trading. But you can see that for most of them, you see that price is sort of pegged around its opening range. It's not really doing much, which is reflective of what we saw in the VIX. We saw volatility low. There's not as much volatility that created a range, and the markets are waiting for something. They're waiting for this ISM Services PMI data to come out, this non-manufacturing PMI, so they can have an idea of how growth could possibly form or what is U.S. growth, especially in more of our westernized industrial nations. And more westernized, societies and economies, they're more services based. So then, of course, the non-manufacturing PMI, the services PMI, is what traders are going to be trading around or focusing on. On last week, we had the manufacturing PMI. We saw that the manufacturing sector contracted. Are we going to see something similar for the services sector? So then, right now, what I'm going to do, I'm going to go to our calendar. Let's see how I'm going to do this. No, that's not where I want to go. Okay, let me do this real quick. This is okay. I just opened up. Okay, yeah, browser has been updated to. Okay, yeah, whatever. Okay, so yeah, we should be on. This is Microsoft Edge or Internet Explorer, whatever you want to call it. But let's go to. I'm just going to go to Daily FX, their economic calendar. So right now, we're going to go to Daily FX, simply because you can see clearly these numbers. But you can see that in about roughly 49 minutes to an hour, we're going to have this slew of data coming out. The first batch is going to be the S&P Global Composite, and Services PMI, which, of course, traders do look at. We do look at that. But the most important measure, especially for the United States, is the ISM Services PMI data, the Institute of Supply Management. I think that's what that acronym stands for. And then we have factory orders coming out in the same hour. But that's going to be, released in an hour. And of course, we can see that the previous values from what we saw in May's number for the April reading, we saw that the services sector expanded. We can see in both reports, we saw the services sector, expand, even though it's sort of softened. It didn't expand at the pace that it usually does. If we take a more broader view of how the S&P, how the services PMI have been released, but we can see that it's still expanding. It's still growing, even in the midst of higher interest rates, which are really designed to sort of suppress growth and suppress economic activity. We're still seeing the services sector still resilient, and that's the reason why inflation has been pretty entrenched and pricing pressures have been sort of held high, and it's been hard to see that rotation in inflation and pricing pressures due to the services sector. The services sector, is hot, while the goods inflation is low, and it has been decelerating. And we can see that in the commodity markets, which we may touch on in a little bit. But if we go higher and look at global services PMI, oops, let me just do if we look at global services PMI, we can start here. We can see that most of them, a lot of them are in expansion territory. They came out You see Spain came into 56.7 expansion. We see, even though it decelerated from the previous month, but let's go to more. Okay, we see Italy Services PMI is in expansionary territory. So it's interesting that, despite what we see across the board, central banks hiking rates, despite what we've been in a year, or what the globe has been witnessing with this project in Ukraine or Russia, or this situation, we don't see it really impacting European markets, considering that they're very close. Their proximity to the region, everyone was saying that they would be impacted, that the economy would be impacted, energy would be impacted. But most people don't realize is that Russia is still, sending oil to some of these nations. That's not what's really being reported, but they are sending portions or, bits of their oil to it. So, yeah, that's a whole nother topic. But as you can see here, we don't see much suppression in their economy. We don't see, especially in the services sector. You remember, most of these westernized countries, NATO-based countries, are more services-based. It's only the East that is more manufacturing heavy, like your China, like your India, whatever. But even India has become a little bit more services based. And, we may touch on that. It's not really important, but you can see here how across the globe, the services sector expanded in May. We're seeing expansion, which is going to feed into their growth, which makes it seem as if, we're not going to see this hard landing in recession as most analysts anticipated. But, we got to give it time. Like, usually the services sector is more durable than the manufacturing sector. The manufacturing is very cyclical and is very sensitive. It usually, okay, I know Bridget said tourism is full steam ahead in Europe. Yeah, exactly. And we're seeing travel start to pick up in the US as well. But yeah, like, we're not feeling recession. This whole talk about global recession has been the most telegraphed discussion in the history of economics, but we haven't seen the full signs of it pass through. But I think it's only a matter of time. I think with all the rate hikes in the backlog that still have yet to pass through the economy, like, I think at some point we're going to feel it. But right now, central banks, the government has been providing stimulus, helicopter money, or just been underpinning markets. It seems as if we're not in recession, or it seems as if we're not even going anywhere, that we're in this Goldilocks situation. But I think in time, in the future, in a few months, when the backlog, because you remember with our rate hikes, it takes, about 6 to 9 months, or even sometimes 12 months for the prior rate hikes to really pass their way or work their way through the economy. You remember, monetary policy works through long and variable lags. So it's going to take time for the rate hikes that happened last year to work their way into the economy now. And we're not feeling the rate hikes from last year. We're only feeling the rate hikes from last May, from May of 2022. This is what we're feeling now. So then we still have a lot of rate hikes that's still in the pipeline, that's still going to make their way to impact the economy. And we may see that turn in the services sector. But we can see here how in Europe, services sector expanded. In the US, we may see the same thing. But if we do, let's say we're surprised and we do see the deceleration in services PMI, but not only that, let's say we do see contraction, then this would definitely be a harbinger, or I don't know, it would be definitely an event that may cause some risk aversion. Because would the U.S. economy be the leading economy, or the first to signal to the rest of the globe where global demand and where global supply is headed, where, economic activity, global economic activity is headed? And I think that's kind of where traders are, what traders are focusing on. That's the reason why we see U.S. equity futures limited and around their opening ranges. They're waiting to see what this ISM services data is going to come out. We already know that the Fed has communicated more tightening of Fed policy, more rate hikes. We know that some fiscal tightening is coming soon, as the Treasury has to replenish their general account. which is going to require some fundraising. And this is all involved with the debt ceiling. They're going to have to raise some funds in order to replenish their general account, which is going to be a form of fiscal tightening. So we're going to have both fiscal tightening going on while also monetary policy tightening from central banks. And not only that, we know that our regional banks, they're not lending credit as much. They're being very careful about, the requirements for receiving credit and getting loans. So then they're restricting. That's a form of tightening. And I think in itself, the market has its own way of tightening by just saving in times where it looks like, things are getting more expensive.
Yeah. So then that should cause stocks to retrace.
Yeah, eventually it's going to cause stocks to fall.
And then the dollar to strengthen as a result of that tightening on both ends, the fiscal and monetary side.
Exactly. So then this is our docket for today. We don't really have much coming out for this Monday, but later on today we do have Japanese yen household spending, and then we'll be anticipating the RBA interest rate decision, which is on tonight. The RBA will be deciding on whether they're going to hike rates this month or skip this month. I know previously, a month ago, they said this is our one and done. We're done with rate hikes. We're just going to do this rate hike and pretty much hold and wait for the cuts. But I think right now, since we're seeing signs of certain dynamics within the economy change, especially in Australia, they're really being impacted by the slowdown in China. You remember Australia exports a lot of their metals and goods to China. And since we're seeing a slowdown in China, this may impact the RBA, and they may even decide to either skip or even not do any rate hikes if the conditions in China get worse. But that's going to come out tonight. The markets aren't really expecting. The markets are neutral on whether we should see a 25 basis point rate hike or no change. He's like, they're unsure, and we can see here that the forecast is for no change. So that'll be coming out during the Asian session tonight. So just be mindful of that for those of you guys that do trade. But yeah. Okay, yeah, we just had some auctions come out, bond auctions in France. Okay, yeah. But anyways, yeah, right now I'm just going to pass the mic back over to Melvin. We already know that markets are fairly neutral. It's hard to read the tea leaves in the futures markets. It's pretty much flat. Traders are sort of waiting for this US Services PMI data to come out. But we still can look for opportunities to trade. We can still analyze price action and find some good trades to enter or prepare for. So right now, what I'm going to do, I'm going to pass the mic back over to Melvin, and he's going to continue with the rest of today's webinar.
Yeah, so I may not be too long. Just may go over a few things. Excuse me. But as you guys can see, we did get an alert that came out. As you guys know, if you go to the 1 hour chart of US dollar Japanese yen, we did see price break and close below this invalidation. And the nature of this break and close means that, hey, the market could be rotating and shifting lower. And right now, I am not going to do anything until we see a violation of this structure. Right here is where we see internal supply now, because we have a break and close below this low. So then this makes this a legitimate supply zone that you have to really pay attention to. So then what I want to do is just change this up a bit. Consider this 1 hour supply. And I'm not going to look for buys until we get a break and close above this structure right here. What we could be seeing is a rotation lower, but we're not going to look for any sales until we see a violation and break of this low right here. This is our order flow low. Once we see a violation and break of that, then that's when we'll look for sales. As of now, we're sitting on our hands on US dollar Japanese yen, and we'll see. But I'm not going to enter any buys right now because of how price is at the moment. So yeah, this is US dollar Japanese yen. What else did we look at? I think we looked at did we look at euro pound? Well, we know euro yen gave us a deeper retracement. I'm pretty sure that did. Yep. And it's right in this first zone. the zone that we identified before. The zone on the 4-hour is right here. So, eventually we will want to see a 3-way pullback. So this is a 4-hour correction. We need to see the 3-way pullback on the 1-hour. Remember, we dropped to the next major lower time frame. So then for this one, we just got a leg A. We need to look for a leg B and then leg C. And then from there, we'll look for a buy. So again, oops. Well, let me just draw this in. So again, even for Euro Yen, if you want to, you can look for a sell because this is leg A. Price still has to form a leg B, which is the correction. And then right around here, you can look the sell into this zone in order to form leg C. And after that happens, that's when you need to look for your potential buy scenario on Euro Yen, because we could potentially see another deeper expansion to the upside.
Would that be a swing trade, right?
Yeah, and that'll be a 4-hour pullback scenario. So like a 4-hour swing trade. But yeah, that will be that if you want to do that. But for the most part, yeah, that's how we're going to play this right now. We got that deeper pullback, so we'll see what happens. We also went to Euro Pound, Euro GBP, Euro Pound, and that's still correcting into our zone right now. So we still need to look to see how that forms. Remember, we want to see a 3-way pullback on the 15. We just see one leg as of now. So just a leg A. We need to see a leg B and a leg C. And you guys know or have an idea of how that will form. This is leg A. Leg B will correct up to area of supply right around here where we have this area. And then we'll see a leg C down here to this area of demand. And then we should see price could continue pushing up to test the highs. So yeah. All right.
Yeah. And if you guys want to, I know we're covering these more, these 1-hour setups, but if you want to trade it based on 15-minute order flow, you could trade that leg B or that leg from leg B to leg C. Since we kind of have an idea of where it would go, you can go down to your smaller time frame and look for an entry on a 5-minute chart to sort of, scalp that move lower. That's if you want to. But
yeah, well, yeah, if you want to. But yeah, like, our job is to help you see how price typically moves, but how you trade, what time frames you focus on, that could be at your own discretion. Like I know for us, what we like to do, from time to time, we do place day trades and swing trades, but most of the time, especially recently, we've been looking for setups on a 5-minute. But in either case, once you understand how the market typically moves, you'll be able to trade any time frame. In some cases, even including the 1-minute, and you'll do quite fine. But all right. So with that said, what I want to do right now is look at a few pairs from a top-down perspective, and then we can call it a day for this meeting, and then we'll meet in the private war room because, as we mentioned, we want to meet consistently, daily in that room, and try to find some ideas together.
Yeah. And for you guys that joined the private war room, I may talk about the OPEC news that came out over the weekend of what OPEC decided to do. We'll touch on that later and how that will impact oil. But yeah, I may discuss that in the private war room for those of you guys that may be interested in learning about that or knowing why. But
yeah. So, all right. So I'm bouncing back and forth, trying to figure out which one do I want to do top-down analysis on. Do I want to do it on gold or do I want to do it on NASDAQ? And I'll let you guys choose, because I think I'm just going to do one example, and then we can take a pause and then meet in a private war room later. But if you had a preference, what would you want us to go over? Gold, XAU, USD, or something like the NASDAQ? So I'll see what you guys will say. So I know Joe said gold, Bridget said either. Does anyone else want to chime in and be the tiebreaker? It's up to you. Or I can make a decision, but both options are good. Okay. Well, since we don't have anyone else to break the tie, I guess we can just go with gold, right? Just stick with that one, and then we'll cover the Nasdaq later on in the war room. All right, so let's go to gold. Let's start at a higher time frame. We can go to the weekly, and let's do XAUUUSD, and let's do the ACAP one. All right, so this is gold. We're currently looking at this from the weekly perspective, and what we see here is that price was moving up, giving us this bullish order flow on the weekly, but we encountered an area where there was strong supply. Look left, structure leaves clues. We see this area right here with this nice huge wick candle right here, and then from there, price started sliding lower and correcting after consolidating for a while. Because what we can see here is that price was in the middle of this consolidation phase. You see sideways price action, so it was topping or consolidating on a smaller time frame, and that's what we typically want to see. Because if you look at all the times we entered this area, we can see that there was some type of sideways price action for a period of time. You know, we can see that price for a number of weeks were moving sideways on the weekly chart before we saw the collapse. And we see the same thing here. Price was moving sideways pretty much for a series of weeks before we see the beginning of this collapse as well. But it's not as strong as what we had before, but it's quite similar. We see a similar price action behavior or price action pattern take place. So yeah, this is on the weekly chart. So, all right, let's drop down to the daily. Okay, and on the daily, what we saw was, of course, a double top turtle soup. Price broke and expanded to the downside, and now we're in this this phase of, you know, just trying to figure out where price wants to go. But if you look at price right now, you know, range looks like it may want to be defined. We see price creating this structure low right here, and we have this structure high right here. So then there's a possibility that we could see price retest these highs. But this is where it gets kind of difficult with gold. So then what you have to do, you have to stick with a particular bias and a particular time frame that you want to focus on. If you're more of the swing trader, then what you can do is say, hey, if you look for the weekly order flow to play out, since order flows to the upside on the weekly, if you go back to the weekly, we can see that order flow is still to the upside. Then what you can do is say, hey, we only want to look for buys, but in that case, you'll just be, you know, looking for some type of buy scenario, you know, right around here on a smaller time frame. However, if you want to trade something like, let's just say you want to trade the 1 hour chart and you're looking at order flow from a 4 hour perspective, which means that order flow right now is definitely bearish, then we want to look for sales. So, you know, we want to stay on that side. And that's typical of what we saw on last week. To close out the week, we saw a nice sell-off in gold. XAU-USD really sold off quite strong, quite hard. And there could be a continuation of that momentum to the downside. So then that's what we're going to focus on in this case. So right now, let me delete this. Right now, I'll keep this here. We see that price is in the middle of some type of correction. After testing this 4 hour area of demand, look left, we can clearly see that this is 4 hour demand that price was testing, and we could be due for a nice retracement in price. So we can see that price is testing an area structure right around here, or really demand right around here. But what I'm going to do, I'm going to go to the 1 hour chart to see how things look, because this is kind of interesting. Like if this candle closes like this with these long wicks to the downside, then we definitely know there's a lot of demand down here, and we could see a deeper correction, you know, up into this area right here where we have this structure to the left. Like, in other words, we could see a deeper pullback into this zone, and then from there we could see a potential retest. But But yeah, this right here, this candle is forming with this long wick. We have about 40 some minutes until the close of this candle. And then from there, we would know with more clarity and a little bit more confidence of whether or not we should see a deeper correction in price. But let me go down to the 1 hour to see how things are looking on the 1 hour. Okay, so right now on the 1 hour, what we see is that price is forming what could be a double bottom. And whenever you see that, you sort of have a clue or a hint to what could be taking place. Price could be in the middle of a temporary reversal. So this is what we typically see whenever we see this. We see price create what appears to be a double bottom, and then it could push, and then this move right here will be leg A, and then we'll see a leg B, and then we'll see a leg C expansion up into this zone. And then from there, this is when we'll look for our opportunity to sell, once you get bearish confirmation, and trade this lower down to these lows again. So this is what I think will happen on gold for today. I think we may be bullish on gold for today. So, look for those opportunities to be bullish on gold. And yeah, what can I say? Look for buy opportunities. I'll be more confident in buying if we can get a break and close. Let me, because usually I'm scalping on a 5 minute. But yeah, Yep. If we get a break and close above this high right here, this will be my order flow high. Price is almost there. If price breaks and closes above that high, that's when I'm specifically looking for buys. And yeah.
Yeah, gold can be a tricky one. Like, just like Melvin said, like, of course, I'll wait for confirmation on gold by a break and close to that structure. But for me personally, the way I trade, I would like to see even that confirmation play out with a softening of treasury yields. Because you remember what we talked about before, gold primarily moves based on expectations of where yields would go, or where real yields would go, which is the nominal yield, your traditional US Treasury yields minus inflation expectations. When you price out inflation, or the expectations of what inflation would be, what is the real yield in the US economy? Because gold benefits whenever, like, either there is no higher real yields, like whenever the real yield gets lower or when it's negative, then traders or investors rotate into the yellow metal as a safe harbor or safe store of value. So of course the appeal of gold would have to increase due to lower yields or moving down of US Treasury yields in order for this rally or this bullishness in gold to be maintained and sustained. So then for me, I want to see a break and close of gold above that structural level. But not only that, I want to see some type of rotation in Treasury yields to sort of support that, this would be a good place to park, or for investors to park their money temporarily as US Treasury yields slide lower. So then that's going to raise the attractiveness, the appeal for the yellow metal. But yeah, I just kind of wanted to, add that in.
Yep, exactly. So we'll see. It all depends on what type of trader you are.
But if we do see it, if it's not going to break above it, then it could still be bearish.
Well, yeah, exactly.
If it closes low, yields can continue to go up, and that means that we may see more downside pressure on gold.
Yep, exactly.
So that's why I want to see a break and close of that structure first.
Yeah,
before I buy.
Yep, same here. So, of course, it's pretty apparent order flow. It's to the downside, but if I'm going to buy, I need to see a break and close above this order flow high if I'm going to look for opportunities to buy. If I don't see that, then I'll still be on the side of looking for sales. And in this case, you may be saying, hey, Melvin, how will we look for sales if price is in this range? Well, that's a good one. But what you can do, you can wait for the environment to sort of shift and then look for 5-minute pullbacks. Like in this example right here, we see price had a slightly bullish environment, not really, but we saw price break and close below this level. And then right here is when we would look for that 5-minute pullback on the 5-minute and trade this down here. You know, we'll go over these examples later, but you know, for the most part, I'm thinking we could see a bounce. So, you know, we'll see what happens, but just be patient, wait for the open, and wait maybe a few minutes after the open, maybe 20, 30 minutes after the open, to know what gold wants to do for this New York session. But I'm thinking we could see a push to the upside, but you know, we'll see. All right. Are there any questions before we end today's session? We can definitely end, take a small break, and then meet up in the private war room. I know we're going to get there closer to 9 o'clock Central Time, which is 10 o'clock Eastern Time. So if you guys want to meet earlier, you guys can. I know Marcus, he usually gets there around 9:30 Eastern. So if you guys want to jump into the room early, you can. I know we're going to get there right around that 10 o'clock Eastern time. But we hope this was beneficial. We hope you guys got something out of today's session. Thank you guys so much for coming. We really do appreciate you guys. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we'll definitely see you guys soon. Stay blessed, stay encouraged, and we will talk to you guys later. And see most of you, or see some of you in the private war room. But thanks for coming, and enjoy the rest of your day as well. All right, talk to you guys later. All right, goodbye.